Qualitative or quantitative?
A bit of both, in fact. And I hear you say quantitative, and that's probably not entirely correct, but it's not far off. And the reason I say it's not entirely correct is often people hear quantitative and they think sort of a black box where information comes in.
That's what I thought, and I wasn't familiar with the Cannon model.
Yeah, the portfolio pops out the other end. But I think a better way to describe it is a rules-based process. That's how we like to think of it. And really what we're trying to put on the table is a process that identifies a handful of key attributes that successful stocks have. And by applying a systemized or rules-based approach to extracting those factors, we can build a successful investment portfolio.
In terms of that, it is a value bias, I assume. And at the moment, when you look at the market, are you finding value? In other words, are you able to populate your portfolio reasonably easily, or is it quite a stretch?
Yes, we are certainly a value manager. There's absolutely no grey area there. And can we populate the portfolio? Actually, very easily. And I think one of the advantages that we enjoy that allows us to actually do this is to have a pretty wide investment universe, about 250 stocks, which stretches a long way down the market cap spectrum relative to our peers. And to preempt a question of yours, if you look at the larger companies on our market, generally speaking, they are fairly fully priced or expensive. So if your market is concentrated in that region, then yes, it is hard to find value as we define it. What you can infer from that then is that our portfolio currently does have a lean away from the large caps into the mids and smalls, but also our portfolio structure is fairly concentrated at the moment. We've taken what we think are some pretty big calls.
So you've got a high level of conviction.
We do.
On what?
A few things. The one which I think is quite unusual, and I know that Kevin is very concerned and tired with what's happening in Europe. We've taken an overweight position in resources, which is probably different from many of our peers. That's quite a new position for us. We've been slowly building that.
You've taken an overweight position in resources.
Correct. And inside of the resources that we are buying, we are quite particular. So the positions that we hold, to name a handful, are a big weight to both Anglo-American and Sasol. Nice positions in both Exoro and African Rainbow Minerals, AECI, and more recently Pan-African Resources. And that's it. So I think
no platinum in there?
Other than through Anglo-American, no direct platinum. I see they had a bit of interest today, which is probably long overdue. They've certainly been on the receiving end of a lot of selling, haven't they? But what I think is more telling about our resources exposure is what isn't there. So no direct platinum, as you suggest, no gold, no billiton. So quite different, even though we are overweight.
But piles of Anglo-American.
A big exposure to Anglo-American.
And if you look into the small and mid cap, I just want to understand. Well, let me ask you this question. How many in your general equity portfolio, how many shares make up the portfolio? In other words, do you end up with a long tail of shares, a lot of small caps that fill up the rest of the portfolio beyond the resources, or is it then even a concentrated net?
No, even then it's quite concentrated. So in the whole portfolio, we're looking at about 30, 31 positions. In our institutional portfolios, it's even lower, 24 holdings. So it's pretty tight, and we have a construction rule at Cannon which says that every position we hold must be overweight relative to its benchmark. And what that is really trying to avoid is to have these long tails creeping in. Things you either just never really sold out of, or they're there for the sake of being there. Yeah, both of those, we think, are misallocation of capital. It's lazy money. It should be somewhere where you have high conviction.
Let's bring this to current news flow. MTN, what are your thoughts? 136 Rand. Earlier, Mark was quite assertive with me in the fact that this is all speculation, etc., etc. The article in the City Press with a transcript. Do you believe it? Do you think that there's going to be reputational damage? Where are we going?
Do we believe it? I think I'll err on the side of where there's smoke, there's fire. It's surprising to get news like this about MTN. You know, they've been the poster boy for a wonderfully successful firm, and I think no one really wants to believe it. But in the environment in which we find ourselves, where there is so much volatility, uncertainty, stress, and in our investable universe, our decision would be to find an attractive opportunity that doesn't have this kind of uncertainty, true or untrue. And you can find these opportunities. Telecom, of course, being in the same sector, has been through the bush in the last, well, for some time, but specifically last week with Korea Telecom. Vodacom is doing very well. A position we've taken recently is Blue Label Telecoms. Oddly enough, though, this is going a bit away from your question, we've actually included it.
From MTN to Blue Label, you could have fooled me. Or at least they're in the same sector.
So we've got 4 telecoms on the table. MTN and Telkom with some question marks. Vodacom has done very well again. And Blue Label, we've actually included as a financial in our portfolio, just because of the nature of the business. But I think the MTN aspersions are just, they're worrying. It's not something that either the country needs or the sector. In terms of your, because at the beginning of the discussion you said you had a rules-based process. Is one of those rules around governance? Yes. So if I had to try and give you a weighting to what is rules-based or as Bronwyn described, quantitative versus qualitative, about 80-20, 75-25 in that order, because an assessment of management, governance, litigative risk, all of those things are important, and all the quants in the world won't pick that up. Incidentally, we have been quite successful within the, and this might raise some other questions, within the construction sector, where some companies are particularly stressed. Those that spring to mind are Sanyati, who asked for suspension recently, and Protec, who are also under pressure, and our quantitative tools actually flag those for us as being stressed businesses, whereas their larger counterparts, Wilson Bailey, Avenge, Group 5, look okay.
And of course, those are the stocks that you're invested in the construction space.
Not Wilson Bailey, but Avenge and Group 5 we are.
And Group 5.
Can I just come back to Telkom? Sorry, yes. I just don't want to. So are you invested in Telkom?
No.
It doesn't. What does it fall down in terms of? It's obviously value, and we were discussing earlier on the show that it's kind of deep value.
Deep value.
It's pretty deep value.
Well, where does it fall down?
We have held it previously, which is sort of fair to note, and it's offered evidence of value for some time. Funnily enough, until recently, it's actually been a very good investment. If you consider Vodacom coming out and a handful of special dividends over the years, it's actually done very well. The thing that caused us to ultimately exit about a year ago, I think, was the qualitative aspect. So sure, there's value metrics, cash flow, but a repetitive nature or habit of making poor investments. Multi-links is probably the most commonly talked about, and their, I suppose, inability to implement what is a strategy which is also behind the curve. So that's a qualitative example of where we ultimately got frustrated with the ineffectiveness of management.
Would you still be frustrated at 21 Rand? You obviously are, because you don't own the stock.
we would be.
There's got to be a point, though, where you will buy this thing because of the deep
So the other side of your question is, when do you get back in?
Yes.
It would take some reassuring that the implementation of whatever strategy it might be at that time is effective. At the moment, they've had buyers coming in and been either chickened out or have been told thanks but no thanks, as was the case with Korea Telecom. Multilinks has failed. They are plowing money into investment after investment, and it just doesn't come back. This is not a good investment.
Can I go on to construction? Have you finished with telecom, or you want to ask some more questions?
But you must admit that it's an interesting dynamic because of the value that it offers.
Absolutely.
And you're going to have, I think, quite a lot of disparity at the moment amongst investors as to whether you buy it now or whether you still leave it alone.
I think
and you would expect value managers to pick it up at these levels.
Yeah, I don't think that's an unreasonable statement because these levels are attractive. It would be hard to argue against that. What would keep us out for now is it doesn't matter where in the world you are and where you look. Governments, as a rule of thumb, are poor investment managers and capital allocators. And I think what they have said by implication with the call on Korea Telecom is they will keep their finger in the telecom pie. That is probably an obstacle as an investment.
All right. Now we can move on to construction.
I think construction is a good topic now.
Right. Yeah. So you've said that Group 5 and Avenge are your entry points.
Yes.
You were early to the sector. Do you think that we're going to see a turnaround in the near future?
Yeah, I'm wondering if it's the line of questions or these hot lights. Yes, we do, of course. Otherwise, we wouldn't be holding them. But we were early, admittedly, and of course, with hindsight, we know that. Until recently, we were very pleased to see that it was the best performing sector on the market. Certainly, May has unraveled a lot of the running for a large part of the market, but our thesis remains intact with the construction sector, or those holdings specifically. And what that logic is a couple of things. The one is, from a financial perspective, their balance sheets are strong. They carry little or no debt, lots of cash. Of course, that cash is required to get through the difficult time.
So are you accumulating more at these levels?
We would be buying it with new portfolios, but we aren't upweighting our positions. But our positions are meaningful.
So your level of conviction is still very high on those construction stocks?
It's very high. We're very overweight. The interesting thing about them, and construction, I think, and this is a perception in our firm, is sold down because the government infrastructure spending program of R1 trillion is coming in the same way that Christmas is coming. Yeah. It'll get you eventually, and eventually it will. But because it isn't coming, investors have shied away. Our take on this is, if you look at an assessment of the market cap of the sector as a whole and the order book, there's a massive dispersion between the two, with some caveats. The one is margins admittedly are worse than they were 3, 4, and 5 years ago, but they are profitable. The order books are increasingly outside of South Africa, which is important from a diversification perspective, and it takes no account of this proposed R1 trillion spending. So if that spending were to happen at some future date, however long that string is, that would be a cherry on the top. Perhaps it's required as a catalyst. That is quite possible too. But we do remain positive on the sector and engaging with management.
I'm going to use that statement when I speak to guys that are anti-construction sector. But public sector spending is coming in the space as sure as Christmas is coming.
That's right.
I think that's a very positive argument, convincing
argument. Well, I think
argument.
it's perhaps a bit cynical, but without that program, the companies look attractive and financially stable, which is
no, I'm taking it literally
key.
That the public sector spending is coming. Have I got it wrong? No, I mean it is going to come.
It will eventually.
Because Christmas comes every year.
Well, I'm not saying it's going to come by the 25th of December.
No. I'm not making that correlation, but I'm just saying as sure as nuts that Christmas comes, public sector spending, I'm actually agreeing with you. I think it's a fantastic statement.
I think it will come.
Sure, so we could be having this discussion in a few years' time.
I think we have to leave it there. Andrew, thank you so much for your time.
Thanks,
Andrew Newell, Head of Business Development at Cannon Asset Management.